Okay, welcome everyone. Today's a bit of a weird day because we're doing a Sunday recap. We're doing a Sunday catch up. We don't usually do this on Sundays. We usually go Monday to Friday, but we're gonna do it today simply because the last 2 weeks Sundays we've kind of had a big move in the market. If we take a look at last week's Sunday, that was around here. We had this massive drop off, and the week before that, look at that, we had this massive buyback. So I figured, you know what? Let's do a nice, summary at the start of the week to see what's going on. And let's prep for the rest of today. We could be getting a move coming in today, or we could be getting some nice scalps potentially over the next few days. So we're going to be taking a look at market structure, liquidity, supply, demand. We're going to look out for our POIs, and we're going to set those alerts. Because we're ready, and we're going to plan ahead for our trades this week. We've had some amazing trades lately. We've had some phenomenal trades. So let's take a look at some of the trades we've had recently before we get into all this rubbish over here. Let's take a look. Well, let's take a look at the last week's Sunday's trade. Well, for last week's Sunday, let's see. So first of all, we were in this range and we started to make lower lows and lower highs. We had a low, a high that was lower than the prior high, and we had another low, we had a high. So we kind of had this consistently, bearish push down, and then we had another low over here. Now this low, why did we come all the way down here? Obviously, prior to coming down there, it's clear to see that this was our range low. Let's just show that so that you can see what I mean by that. This was the range low over here, but price came further down, but why did price stop here? Well, the reason price stopped there is very simple. The reason price stopped there is all the way over here. We had this unmitigated demand zone. All right, it was a nice fresh demand zone. It hadn't been touched before, and price decided to come back to touch it, to give it the juice to go up. All right, and that juice is also what gave us a nice little internal breaking structure there, which confirmed that uptrend. So that's exactly why price stopped there. If you look closer, if you investigate what's going on in here, you're going to see that I'm pretty sure you're going to see some sort of demand zone in there. Okay, you're going to see some sort of remnant demand zone, which price has now come back to mitigate. And so that's beautiful. That's why we follow supply and demand, and that's why once you master these concepts, price action makes way more sense, honestly. All right. So obviously we had that move down here. Could we have entered along here? Well, let's take a look. If we look at the daily structure, we can see that our last daily lower high was coming in around here at about 63,947. Now let's see. Could we have had a trade in this leg here? Well, looking at it, I can't see a clear accumulation model. Well, we probably got a counter trend model 1. Now, what is a counter trend model 1? Well, very simple. Counter trend model 1 is a case where you have some sort of demand zone, all right, and you have price coming down, giving you the lower lows and lower highs. Now, price tags your zone and very quickly breaks structure. That would be the break of structure there. Break structure, retraces, and carries on. That's a classic counter trend model 1. Now, there are two places you could enter after this break. You could look to enter purely off of that break in structure. So let's get rid of that because we don't need that. Today might be a bit of a long stream, guys, because I've actually got the energy. Now, I'm going to be away. I'm going to be away today at around 6 o'clock UK time because I am off to play paddle. Now, I've recently started playing paddle for a few weeks now, and I love it. I'm loving it. So here we go. This is where some people would have entered a trade off of, obviously, a counter trend model 1. This is the first position of entry. So you could enter there. If you enter there, you enter your long position there. You have to cover this low. All right. Theoretically, you have to cover that low. Now, if you put your stop loss here, why is this wrong? Well, if you put your stop loss here, look, what do we expect after a break in the structure? After a break in the structure, we expect a retracement. Now, this retracement is allowed and can go deep into that expansion leg. So that means putting your stop loss here is probably not the wisest thing to do. So you want to cover any possibility of some sort of reversal or retracement reversal that takes you out. So don't put your stop loss there, all right? So Should you put your stop loss here? Maybe here's better. No, you do not put your stop loss there either. Why? Because theoretically, price is allowed to retrace as deep as it wants. Like, price is actually allowed to SFP that prior low, okay, before and continue up, and that could still be legitimate market structure. So we want to cover that low all the way down here. So we're going to see if we had a model 1 entry over there. Of course, model 1 entries, they're very nice, especially when we have that juicy, exciting but divergence. It could be an RSI divergence. It can be a divergence on market cipher. I'm not sure what indicators you use. Whichever indicator you use, it's reading market structure. So it will tell you, it will arrive at the same answer. It could even be an EMA, perhaps an EMA crossover. All right, but let's see. Did we get a trade there? Well, as price came down, price was giving us low lows, low high, low low. Okay. Now what that meant was we couldn't enter a trade until we had this level lost. And what did price do? Well, price broke through that level. All right, this was a tricky one. It was a tricky one because it wasn't a very convincing break. We would like to see that aggressive buyback, but we didn't quite get that. But we did get a retracement after that, a shallow retracement. And then we went off. Okay, so there's no reason why, if you were watching the charts at that time, if you were looking at market structure, there is no reason why you should not have entered that trade. Now, even if you entered the trade simply off of the break, that would have been around here. Okay, now there's no reason why you couldn't have done that. And if we had done that, let's see what the profit of that trade would have been. All right, you would have netted 1.7 risk to reward. I mean, that's not special. That's not special. All right. But if you were patient trader number 2 and you waited for price to retrace, you would have gotten a better deal because you might have entered there, which gives you a 3.28 risk to reward. Okay. So much better deal. All right. So that's trade that we could have. And that was last week's. What was that last week? Sunday? Let me double check that. Yeah, around last week Sunday. I remember having a big move last week Sunday. All right, it's been weird because I don't usually trade on weekends, and usually I take the weekends to relax and just sort of unwind, spend time with the family. However, we've been getting these big moves on weekends, so hence why today I figured, let's do the planning this weekend, and let's see how it goes. So that was trade number 1. That was a weekend 2 weeks ago. Okay, now we also got another trade. The following weekend. What can we see here? Well, we know that we've come to the range low. We've broken structure on the daily. We're printing high highs and high lows, And however, Bitcoin has given us this weird little structure that's telling us it's losing strength. It's losing its gas. Why is it losing gas? Because look, if we look at the market structure on the way up, we've got high, 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 low. All right. We can see here that each successive higher high is becoming weaker and weaker in structure. And we can see that clearly. Let's take a look at the first higher high. The first higher high gave us a 7.6 or 7,000, almost a $7,600 move, all right, which is a massive move, especially in the crypto world. Now let's take a look at the second movement. Well, the second break in structure was a very meaty 2.5K, all right. So again, we've had that decrease. I like to call it the amplitude of break in structure. So we've had that decrease in amplitude of break in structure. Now next, what have we got after that? So next we've got about a 1.3K move. So what's this telling us? These should be green actually. This shouldn't be red. So let's quickly change that to green because let's see if we can find that quickly. Yeah, green. Why is it green? It's green because it's going up. All right, so we want the bull. Well, this is how I like to check, whether a move is gaining momentum or whether a move is losing momentum. By the way, guys, if you are hearing me properly on the chat, feel free to just drop a message so I'm aware. Also, if anything happens, because I've been having issues with the Wi-Fi recently, so if I have got any issues, feel free to drop me a line on the chat so that I am aware. I'm aware of what's going on. Let me just quickly take a look. Let me quickly take a look at the chat. All right. Okay, that's cool. That's cool. Looks good. All right, cool. We've got 3 watching. Nice. Shout out to you guys. I'm not exactly sure who those people are, but shout out. All right, anyways, so let's carry on. So we've got these series of higher highs, taking place at the moment, okay? And then price decides to slow down a bit. And then not only does it decide to slow down, it decides to give us again a nice counter trend model 1 entry. Now, what is the counter trend model 1 entry? Well, the counter trend model 1 is the reverse of what we've just looked at. Okay, if this was a counter trend model 1 in the bullish scenario, all we have to do to consider this on the bearish scenario is just to flip it. So if we flip this, if we simply invert the scale, we're going to see the criteria for the bearish scenario, and that's this. In the bearish scenario, we're printing higher highs and higher lows. We get that break in market structure here. We're patient, we wait for that retracement, and then we flush it down. Okay, so that's exactly what we're looking for as far as the price action goes for Bitcoin. So let's see what we got. Well, over here on Sunday, we had price giving us a nice, nice flush up. We had a high high, high low, high high, high low, high high. Okay, then actually we could take that one step back because we had a higher high there, a high low, and then another higher high. All right. Now, the chances are this region here is an area of interest. Why is this an area of interest? I would suggest you take a look at this region here, go and analyze what's happening here, and I'm pretty sure there's some sort of zone. Perhaps in these two bars here, there's some sort of supply zone that's, allowing price to get some sort of sticking point here. And even if we were just to look at this leg, let's look at this leg up. Let's consider this a leg. Now we wicked that level, we flushed down, so we actually do have this zone as well. This whole range supply zone, which acts as potential resistance over here. Okay, so that's what's potentially stopping price there. Now, carrying on with our demonstration. So we've got that high high. What happens after that? After high high, we break market structure bearish. All right, we have that breaking structure. Now you could enter off that break, of course. Of course you can enter off that break right there. However, if you are patient and you do what we say here every single day, you would have been the one to wait for that retracement. That retracement, it wasn't a big retracement, but it was a tiny little retracement, okay, for better risk reward. And we could have taken that trade all the way down here for a 4.9 risk to reward on that one. Okay, so not a bad trade there. Congratulations if you took that one. All right, but we are where we are, and that is another Sunday. So we're looking to see, is this Sunday going to give us a nice push? We got a nice long 2 weeks ago. We got a nice short last week. Are we going to get a long over here? But, we have to say it's in a weird position at the moment. Market structure is in a very weird position at the moment. Why? That is because, last week and 2 weeks ago, we got that long from a nice notable low, didn't we? Nice notable low. However, here we're kind of in the middle. We're kind of in the middle of some sort of range or some sort of downtrend. Hence why we're going to look at the price action and we're going to see what is price telling us as of now. So let's just take a global view of what's going on. First things first, we can see here that we have this massive range. I'm going to draw that with a box over here. We've got this massive range here. All right. Initially, this was our range. And then obviously price came down, price rallied up, and then price broke bearishly from that range. All right, but it was kind of a manipulation play. Why? Because we had that quick buyback. Okay. However, price came up, but we kind of expected price to go all the way up and rotate to the top. But price had other ideas. Price broke daily structure bullishly, and then it broke it bearishly again, giving us this play all the way down here, coming all the way down to this level. This is when lots of traders were starting to panic, thinking, what is going on here? All right, so now we're here at this level, but we didn't close below this daily level. Not only did we not close below this daily level, we also did not close below this prior level, especially on the 18-hour, on the daily, on the 3-day, on the weekly. So what does that suggest? That suggests that right now our market structure looks like this. It looks like this internally. That is, look, we've got high, we've got low, we've got high, and then we've got a low, which has just SFP'd that prior level. So we are in line for some sort of rotation all the way here. This is why I'm thinking price could potentially come further up. And not just that. The other reason why I'm thinking price could potentially come further up is because we seem to be creating this nice little flag over here. For those of you who can see that. So we can see that we had this massive thrust up here. Okay, let's go back. Let's make it nice and thick and blue. we've had this massive thrust over here. We've kind of had this flag, this bull flag that's come about. And what's the target of the bull flag? Well, the target of the bull flag would be if we simply took this measurement and put it at the top. The target of this bull flag could be coming in at around, not bad, 75,000 / $76,000. That would break the all-time high. So is this the move that breaks the all-time high? Is this the move we've been waiting for? All right, we're yet to find out. Now, not just that, we also have another bullish scenario on the chart, and that comes from the dear and beloved indicator market cipher. So as you can see, market cipher on the bottom, as we created this low, is giving us a nice rounded move as far as our money flow. That means money is moving into the asset. And not just that, we have this nice bullish divergence all the way at the bottom as well. So as price is rallying down, momentum is rallying up. All right. So this could be a move that takes us up. Now, it may not be that the move has started now. We may get one more retracement back into demand before we fly up. But this looks like a really nice move. Not just that, because we also have, let's take a look at history. Let's see historically when price has given us a nice divergence on the daily. Let's see what price has done. So let's just take a look. Let's go to the side and we're going to do a bit of back testing. We're going to see the last time we got a divergence here. So this was not a divergence. This was a divergence. So the last time we got a bearish divergence here, you can see momentum waves coming down, price going up. We can see clearly that we got a nice 20% move down. A 20% move down. All right, let's take a look. Let's go to the left. Let's see if we can find something else where price has given us that nice divergence. Look, we got another one here. So price is rallying, momentum rallying down, money flow rallying down, price rallying up. Let's look at that move. Again, we got a nice 20% move to the downside. All right, let's look at some bullish options. So let's see. Last time we got a nice divergence. We're going to have to go further back. Let's take a look at this region here. Oh, this looks massive. Okay, so we don't quite have a divergence here. Let's see. Nothing here. Okay, there's nothing I can see right now. Now, this doesn't happen all the time. You don't get divergence every single day, especially not on the daily. But when you do, usually you get a decent move. All right, so let's look at it. We've got one here. Nice divergence here. Okay, we can see that as price is rallying down, we can see that our momentum is rallying up. Now, let's say we were to take an entry perhaps off of this confirmation. Okay, again, nice 17% move to the upside. Okay, so these daily divergences, they give us at least a 10 to 15% move. All right, the ones we've looked at so far has given us averaging of about a 20% move. But this is good. This means, perhaps, having a bullish bias at this point is not a bad thing. Also, the fact, if we consider this as a massive range, if we consider this big range, this being our range, all right, we are in the discount section of our range, okay? And what should we be looking for in our discount section? We should be looking for longs on the discount section of our range, all right? So now let's take a deeper look at what price could be up to. All right, let's see. So if this is a bull flag, that will be a nice little move up. And what will I be looking to do for this move up? I will be looking to enter on each and every demand range that we get up here. So let's say we get a nice flush up that looks like this, creating higher highs and higher lows all the way up. What am I going to be doing? Well, very easy. I'm going to be looking here to enter at a long. I'm going to be looking here to enter a long. I'm going to be looking here to enter along. I'm going to be looking here to enter along. Okay. Now I'm going to be a bit cautious as I get towards the range high. Why? Because then, I'm kind of getting to the objective of that move, and I do not want to be trading against the objective. Why? Because this could simply be an SFP. We can simply decide, as we wick that low, we're going to break structure bearishly there, and we're going to carry on all the way down. Okay, so as I get to the top of that range, I'm obviously going to be looking at taking profits. So that's kind of how I'm looking at it at the moment. Now, what are the things? What are the things that could stop this potential thrust up? Well, we're at one of them right now. We're at this 4-hour zone and we're at this 2-hour zone at the moment. So we have a nice 4-hour supply zone that could potentially act as an obstacle. This could be exactly where price reacts from in order to flush us down. Now, we've already got a reaction off that zone. So if we take a look, I'm going to drop down to the 45 minute. I'm going to get rid of this. And we're going to see that, following this massive thrust up. By the way, I'm sure most of you missed this. But there was an entry. There was a way of catching this move. We're going to talk about that in a second. But before we talk about that, let's see. Now, we are at this 4-hour zone. This 4-hour zone was created, on the 2nd of August at about 1 o'clock. Now, we are at this zone, and we have gotten a nice reaction off the zone. We got a decent pullback. All right. Have we got a confirmation for a short yet based off of market structure? No. We do not have a confirmation yet. Why? Because on a 45 minutes, your last high low is all the way down here. Okay, let's take a look at a 30 minute. On a 30 minute, the same thing. On a 24 minute, the same thing. On a 15 minute, okay, right. On a 15 minute, we have our last high low coming in at this level right here. So let's just mark that out. So on the 15 minute, we have a last high low coming in at around 60. Let's take a look at that number, 63,487. All right, so we do need to wait to lose that level first before we look to enter a short based on a counter trend model 1. Simply based on a counter trend model 1. And what would that look like? That will look very simple. That will look like, what we've got here. A high, a low, a high, a break-in structure, a retracement, and a continuation. So we have to wait for that one. But before we wait for that one, nothing stops us from treating this as a range, as a standard accumulation or reaccumulation on the way up. And that's what price likes to do. After a massive pump, after a massive thrust, 9 times out of 10, you're going to get a nice consolidation. You're going to get a bit of a range forming before price decides what to do next. Hence why we're going to treat this as a range. This being our range high, this being our range low. So we've come down, all right, and then we're going to be looking for shorts at the range high. So we're going to set potential trade number 1, PTI number 1, a short from our range high. Okay, and that's how we play ranges. We look at the range high, range low, see if we can get a deviation, see if we get a nice confirmation. That could be market cipher, that could be market structure, going from printing higher highs to higher lows. And we're gonna take a look as well at our range low. So our range low, that's another place for a trade. So I'm gonna put a potential long trade at the range low. Because what's to say that price, yes, price has internally broken structure, yes. The price could come down first before it gives us that move. Now, I'm not saying this is your profit target, by the way. I'm not saying enter this trade, and set this as your profit target. That's not what I'm saying. But I just like to make it nice and small so it doesn't take up the entire screen. So we're looking at short over there, a long over here. There is a chance, I'm not sure which is going to happen first, whether the short's going to happen first or the long's going to happen first. All right, but we're going to wait and see. Now, what else can really happen in this range? Well, in this range, there are only 2 other options. If we don't get a deviation or a deflection from the range extremes, all right, there is a chance, there is a big chance that we simply get a break up. Now, if we get a break up, that will be fine. If we get that move up, what are we going to be looking at to do? Well, we're going to be treating this as a classic RIMC, range initiation, mitigation, continuation. So what does that mean? That means as we break up, we're going to be patient. We're not going to be the traders that do this. We're not going to be the traders that say, do you know what? I'm seeing prices starting to pump. I'm going to get in right there. No. We're not going to do that. We're not going to do that. We're going to wait. We're going to wait. Because yes, you can do that. But what's to say price doesn't come up here slightly. Price doesn't come up here slightly, and then decides to break structure there, reversing you out. All right, risky behavior. So what we're going to wait and see is we're going to wait for that retracement. We're going to wait for that pullback, and we're going to say, right, can price come all the way up, retrace down, all right? So this is where we have that mitigation back into our old range before we get that continuation. So in the case we do that, I'm going to be looking to enter my long right around there. All right, now that level yes, that level could be confluent with so many other areas. You're thinking, right, TJ, how the hell are we going to get that exact level? When are we going to know when that retracement is done? Well, there's several ways you can do it. First of all, you can look at this leg. You can look at the expansion leg on the way back and ask yourself, is it creating nice market structure on the way down? Is it creating nice lower lows and lower highs on the way down? And when do we get that flip? Do we get that flip that's going to carry us all the way up? Now that is what we call a reconfirmation. So you got your first confirmation that we've had the range break, and you're waiting for that reconfirmation so that you can enter the trade with more precision. And not just that, is that level confluent with some sort of, demand zone over here? Do we have a nice demand zone that's going to come out of that level? All right. We can show that demand zone. Let's show that demand zone over here. Now, do you know what? Let's show it in green. Let's make it a bit more colorful. We'll call it a range demand. All right. So are we going to get a zone over there? Now, not just that. Is that level also confluent with a potential Fibonacci retracement? All right. Look at that. Look at that. Let's see if we get something like that. And if we did, that will not just be reason number one, being your RIMC, reason number two, being your Fibonacci, reason number three, being your potential range mitigation. And you might want to say, do you know what? Just to add on to that, let's take a look at the range, the fixed range tool. Now we can't quite do that yet because we have to wait for the range to break. But let's just say we took out a fib range, and then it was also this red mark, the POC, or the value area high was confluent with that level. That would be a nice place to enter that long. However, is that a long that you should enter and say, do you know what, I'm done. I've got my trade for the week. This is going to give me 6-7% and I'm good. I'm going to shut my phone, shut my laptop and go away. No, you should not do that. And the reason you should not do that is very clear. It's this guy over here. Look at this guy over here. You've got this 2-hour zone, this 2-hour supply zone, which could potentially act as a reaction point. And that reaction point could well enough, yes, it could be simply a retracement on the way down, on the way up, but it could also be the place where we get a flip in market structure. All right, so we do have to be careful because we know that yes, the objective of the order flow is to carry on, pushing high all the way to the 70s. However, we can get massive retracements on the way. Okay, understanding this is a range, understanding what happens in a range, we get oscillations up, down, up, down, up, down all the time. All right, so that's what we're looking out for right now. So let's go back into our internal range and let's see how else can we be looking to play this. So the only other thing that could happen, and we've kind of already covered that, is in the case that we actually get a break on the way down. So I'm going to get rid of this now because we don't really need this. We just need this at the back of our mind to know that this is a potential play, a potential setup we could be looking at. All right, so we're going to get rid of all of this. We're going to get rid of the tick. The more ticks you have, the better your zone. All right, and you want to be looking at your zone. Is it a fresh zone? Is it an original zone? Okay, is it a zone that gave us a massive flush up? Because those are the zones that are more likely to work, aren't they? All right, so what are we looking out for next? The only other thing that price could do, well, it's not rocket science. Price could actually say, do you know what? I'm going to break down from here. I'm going to break down, and in doing so, it would have obviously had a failed demand over here. It would have broken bearishly. The 15-minute market structure would now be bearish. Well, in that case, what are you going to be looking out for? You're going to be looking for the opposite. You're going to be looking for a retracement here to flush it further down. All right. So that's it. That's what we're looking out for. And that's how I'm going to be playing this range. Okay. And I'm going to be that there is a 2-hour zone up there. And I'm also going to be cognizant that, hey, listen, we do have this fair value gap over here. So if we take a look at the fair value gap, remember, fair value gap is simply a displacement in the market. It's simply a place where we've got inefficient price action. All right. And what does inefficient price action like to do? Inefficient price action likes to become more efficient. So fair value gaps get filled. So we can see here we've got fair value gaps over here, fair value gaps over here. Now, yes, you can draw your fair value gaps yourself, and I would recommend you do that. I would recommend you do everything yourself. But if you do want, there is a nice indicator called Fair Value Gap Spaceman BTC, which you can use on TradingView, and it can help you draw your fair value gaps. All right, so that's it. That's what we're looking out for over there. Now, let's take a look at the trade. The trade that gave us this big flush. Now I guarantee you, most traders did not catch this trade. I guarantee you, most traders did not catch this trade, especially because it was hidden. Now this is one of the trades that you only really catch when you spent a lot of time backtesting Bitcoin and you spent a lot of time backtesting Market Cipher. All right, but there was a nice trade here. There was a nice little long trade to catch this move, and this move would have given us, I believe, we're going to take a look in a second. We're going to take a look at what the risk to reward on that trade would have been, but I believe it was a juicy trade. Now, did I enter that trade? No, I did not. I did not enter the trade. All right, I didn't enter the trade because I was a bit shook. I was a bit shook because we were in the premium section of our range, so I didn't enter that trade. All right, but I'm going to tell you how you could have entered that trade regardless. So let's take a look. Well, we can clearly see that we're in this range. All right, now internally from this range, we can look at our range structure. Yes, we've come up in our range. We've set our range high. Now, as we've set that range high, price has decided to then rally down from that range. It's created a low, a high, okay, and it's created another low. All right, so that's the market structure we had internally from that range. Now, we were looking at a potential short from this level, okay, and that makes sense. That's not a bad thing to look out for. Why is that not a bad thing to look out for a short? Well, first of all, you are in the premium section of the range, so tick number one, okay. Secondly, you are coming to this key liquidity point, all right, which could have given us a potential reaction up there, okay. That's tick number two. Now, third, we also had this internal model over here. We had these higher highs that were not, sufficiently higher than the prior one. So we were looking at a potential reaccumulation model here, where we had tap number one, tap number two, and potential tap number three to flush us down. All right. So that was the bearish scenario. You can see why this made me slightly hesitant. You can see why I decided to opt out of this one. However, on the bullish side of things, what did we have? Well, on the bullish side of things, we had this trend line. We had this trend line that had been getting respected for quite a while now. I'm going to show you this trend line in a second, but before I do that, I'm just going to get rid of these little drawings I've got over here. We had this trend line, and let's take a look at this trend line. If we use our trend line tool, okay, we can see here that not only did we have a trend line over here being respected, we had tap number one, tap number two, tap number three. We had this curved bit of liquidity, so we had lots of stop losses over here. All right. Not only did we have that, we also had this internal trend line, tap number one, tap number two, tap number three. So as price came to our level, okay, if we now zoom in to see what price was doing, as price came into our internal range, this being our internal range over here, okay, as price came into our internal range, yes, we had tap number one, we rallied down. Yes, we had tap number two, we didn't quite rally down, all right. Coming back for that tap number three. As price came to tap number three, we can see that it was attempting to break down. It had attempt number one, no, failed, didn't fail to take out this low. Attempt number two, failed again, all right. Attempt number two, attempt number three, attempt number four, failed again, all right. But we maintained this upward sloping trend line, and as a result, we rallied further up. But where was the confirmation? Well, the confirmation was given on Market Cipher. It was hidden. It was very, very hidden. We're going to find it now. We're going to find where that confirmation was. The confirmation was right here. So it was hidden because we can see this was what we call a hidden bullish divergence. A hidden bullish divergence is where price is doing the opposite of what you think. So as price is creating higher highs and higher lows, your momentum is creating lower lows and lower. As price is creating higher lows, your momentum is creating lower lows. All right, and usually that's what happens when we get this hidden divergence, and we can see that clearly here. That as price creates, we can see here it creates this flush of higher lows. we can see that our momentum wave is giving us this flush over here. All right, and that's exactly why we got that move up. Now, you could have entered off of that confirmation. If you entered off of that confirmation, man, you'd be in good profits right now. You'd be in great profits. Let's say we got the confirmation right here. Mate, this is just crazy. And it's even more crazy because your stop loss would have been so tight. Your stop loss would have been so tight that your risk and reward would have just been disgusting. Alright? Your stop loss would have been so tight. Now, this is not an entry based off of market structure. So for those of you thinking, well, where is the market structure analysis here? No, this is not based off market structure. This is purely based off of market cipher. Now, your entry would have been here. Alright? Now, let's see what that would have given us as far as risk to reward. If we took that all the way up to that zone, that supply zone there, look at that, 38%. That is not bad. That is not bad for a single trade. Let's see how long that trade would have taken us. That trade would have taken us approximately 10 hours. Okay, so not bad at all. Approximately 10 hours to make 38% on your account. And so for those of you who do not know what that means if you risked £100, you would have gotten £3,800, so $3,800. If you risked, let's say you were trading on a 100k account and you risked 1k per trade, you would have made about 38 grand in 10 hours. Okay, so not bad at all. That's not bad. The trades like that, that's when you sit down, you relax, you say, do you know what, let's go on a holiday. You know what, let's not trade for the rest of the week and let's do something nice. All right. So if you did catch that, if you were using Market Cipher and you saw that, congratulations. That is great. That is fantastic. However, I do want to show you something else. We are seeing something similar. What do I mean by something similar? Well, really and truly, when you break down what's happened here, okay, what did we really have? What really took place here? Well, this is what took place. What took place is we had, let's use the highlighter. We had a mark up, we had a range, okay, and within that range, we got a nice hidden bullish divergence that took us up. That's all that happened, and that happens all the time. A hidden divergence usually comes out when you get a continuation play. Okay, when you get a continuation of an uptrend or continuation of a downtrend. Now let's see what's happening here. Well, what's happening here is, again, what's happening? So we've got that move up. What do we expect after that move up? Some sort of range, which we have confirmed. We have confirmed some sort of range. And is there a chance that if we get a hidden divergence here, we could be breaking up? Is there a chance? Yes, there is. And let's see if we have gotten a hidden divergence. So we're just going to take a look. We're going to first of all get rid of this blue mark. Or not the range, we'll keep the range. Or we'll keep our zone. But we get rid of this mark. And we're going to look at this to see if we had anything here that could have potentially given us a trade. So of course we can look at this as far as market structure goes, but I'm just going to look at this as far as market cipher goes for now. So I'm looking out for a hidden bullish divergence. Can I see a hidden bullish divergence? I can't see it on the 12 minute. Can I see it on the 5 minute? Can I see it on the 5 minute? Yes, I can. Yes, I can. So what we can see here on the 5 minute is we can see that as price comes up, creating higher lows, our momentum wave is coming down like that. Okay, so not bad. So that's what we have over there. We've got a nice hidden bullish divergence. All right, and look what that's done. That's already given us a decent move up. If we were to measure that move, that's already given us, let's see, if we were to enter on that hidden divergence and we move all the way up there, let's say we put our stop loss. Now, theoretically, you could put your stop loss here covering that last, demand range. However, it's safer and safest to put your stop loss about there. If you put your stop loss covering a low, you've got already a 2% move on your account. And if you had put your stop loss there, you've got about a 4% move on your account. So not bad. Not bad at all. So that's a trade you could have entered today on a Sunday. I don't usually trade on Sundays, but that is definitely a trade that you could have entered already. Now, let's say you did not have Market Cipher, because I'm aware most of you don't have Market Cipher. what you would want to do then is you would want to say, right, what is market structure telling me? Well, market structure is saying I've got a high, I've got a lower low, a lower high, a lower low. I'm going to wait for market structure to break. Where is market structure breaking? Well, market structure, the last level to break is here. I'm going to draw this line all the way over here. Now I'm going to see price break my structure. Great. What do we expect after breaking structure? We expect a nice pullback, a nice retracement before we carry on up. And that's exactly what we are seeing right now. All right. So if you were looking to enter that trade and you've missed it, that's not the end of the world. That's not the end of the world. What are you going to do now? Well, what you're going to do now is what we said earlier. You're going to trace the chain. You're going to trace the demand chain. And you're going to see where else can I enter a trade here. Is price going to give us a nice structure here, creating high highs and high lows on the way up? And if it does, there's no reason why you can't enter a trade here. No reason why you can't enter a trade there. No reason why you can't enter a trade there. But the higher you get towards this range high, the more careful you need to be. All right. So that's it. That's enough of this range. Let's see what else is out there. Now, as we said, room C is a thing. Range, initiation, mitigation, continuation. So could this be a chance that we have this range, we've initiated after this range? Could there be a chance that we're going to mitigate back into this range before we continue? Yes, of course. All right. And so if that does happen, I'm going to be looking to enter my trade at one of these levels. But you have to be careful here. You have to be very careful. Why do I say that? I say that because of this guy here. I'm going to make him nice and thick. I'm going to give him a nice level 4. And I'm going to make him nice and dark. All right. Why? Look at all these stop losses. Look at all these liquidity points. This could easily get flushed. It could easily get flushed. All right. So you want to make sure we are waiting ready and aware of this level over here. Now, we can extend this now because price has rallied further up. Now, this is just a thought, but is there a possibility that price gives us a nice PO3 here? What is a PO3? A nice power of 3. Feel free to Google that if you want to learn about PO3, or hit me up on Discord, hit me up on WhatsApp, and we can talk about that. PO3, I'll explain simply. A PO3 is simply when you have an uptrend, as you do, all right? You then have a range, and then you have a break of that range. However, not a convincing break. You have a slight, accumulation there, and then you break bearishly, flushing yourself all the way down. Now, this is what we call a PO3. And why is it called a PO3? Why the number 3? It's a PO3 because we have phase number 1, which is an accumulation phase, followed by a manipulation phase, which is phase number 2. And then after that, we get a nice little flush down. We call this the expansion phase. So 1, 2, 3, PO3. Okay, so is this potentially something we could be seeing here, where this is our accumulation phase and this is our expansion, our manipulation phase, followed by a nice little expansion phase here? And why would this be a good move? This would be a great move. Why? For the bears, because it will sweep all this liquidity. And I'm pretty sure if it happens, it's going to happen fast. It sweeps through all this liquidity, closes these fair value gaps that we have over here. And not just that, guess what we have over here waiting? We've got this nice little demand zone right at the bottom of this level. A nice zone, if I can actually click on it. A nice little zone, which I'm going to drag all the way up here so we can see it clearly. I'm going to move this over here. I'm also going to take this. This is a potential setup. I'm going to get rid of it for now. And I'm going to remake it and put it over here. Alright, that would be a nice little move to get us down to our POI over here. Okay, so that's why I'm keeping an eye on that. That is still a possibility. Remember, we can only stack the probabilities in our favor. We can only say there is a high likelihood that price could do this. We cannot be 100% sure, 100% certain that this is what price is going to do. That's why we are preparing for every single instance over here. Okay. So that's what we have here. We got a nice potential PO3 play. Now, let's say we do get that move down. All right. Let's say we do break bearishly from this manipulation leg, and let's say price starts to do this. Now, price could very well start to do this, and then not come all the way down here, but decide instead to flip structure here, having that break of structure up there, then we're tracing for that continuation. That is perfectly fine. Price could do that, sweeping some of the liquidity points, but not all of them. All right, and in case price does that, where are we going to be looking for our next trade? That's what we're going to spend some time doing now. We're going to check, are there any zones over here? Okay, and not just that, where has most of the participants in this market, where have they gotten involved in? Where is there a high volume node or a point of control within that level? Okay, and also we're going to be checking, where is that fib level? Where is that fib zone? So we're going to take a look at that now because we've got time today, and we're going to do that right now. So let me just get rid of this quickly. We're going to get rid of this, and you're probably thinking, well, what's that pink box doing? What's that pink box doing over there? Well, that pink box is simply to show us that our market structure internally looks like this. We've got a low, a high, a low. We then have a breaking structure. Following that breaking structure, we've left this zone, which is our demand zone. It should be green actually, okay? And that demand zone could be a potential point for a reaction. All right, that's exactly why that is there. So why don't we take a look? Why don't we tidy this up now and take a look and see whether we could potentially get a POI in there somewhere. So we're going to make this green. Okay, call it our demand range. Okay. And we are just going to get rid of these setups here that we didn't get, so there's no point having them on the chart. And I like to use the replay tool here, okay, to bring it back. And we're just going to check. We're just going to check to see if we have any zones in here. I'm looking for any supply or demand zones in here. All right, and we're going to start. Let's start on the 8 hour. We're going to start on the 8 hour to see whether we've got anything in those zones. Okay. Okay, that's been mitigated. Yep, nothing on the 8 hour. We're going to go on the 4 hour. Oh, we could potentially have a 4 hour zone here. Let's check. So the high of that zone is coming in at 11.4 and then low 11.6. Yes, indeed, that is a zone. So we're going to take our tool and we're going to call that, let's see, let's change that to, we don't want that to be green. Let's make that, yeah, brilliant. Call that 4 hour, yeah? Alright, nice. So that's our 4 hour zone over there. Let's see if we come down. Yeah, there's nothing. That's the only zone over there on the 4 hour. We're going to take a look at our 3 hour zone. Do we have anything on 3 hour? Nope. Let's look at the 2 hour. Anything on the 2 hour? Not that I can see. Let's look at the 1 hour. Do we have anything on the 1 hour? No, maybe. Maybe. Let's see. Yep. We do have something on a 1 hour, but it's directly below that 4 hour zone. So, it's very close to the 4 hour zone. I think if you're already watching that 4 hour zone, I think it's still worth drawing it because price could break that 4 hour zone and you think, right, we're coming all the way down. But it could just be coming down simply to mitigate that 1 hour zone. So we're going to draw that anyways. I don't really like drawing too many zones on my chart, but we're going to draw that anyways. It's better to be safe than sorry. Okay, let's see. So that's our 1 hour zone. Let's just make sure that's nice and aligned. Yep. Let's see. Do we have anything on the 45 minutes? So we got a 45 minutes. Do we have anything there? Nope. Everything is mitigated. Apart from this one all the way at the bottom. Apart from this all the way at the bottom. Alright, but I'm going to leave that for now. Let's see, on the 30 minutes, do we have anything on the 30 minutes? Not that I can see. 30 minutes, everything's mitigated. Yep. 24 minutes on the 15 minutes. And now the 15 minutes is usually when you start to see perhaps more zones coming because you have more internal structure. But on a 15 minute, yeah, we have a 15 minute zone here. Yes, we do. So we'll draw that across. Apart from that, I believe everything has been mitigated. So let's look at the 12 minute. You might be thinking, why are you even bothered about the 12 minute? I like the 12 minute. 12 minute is a great time frame, especially for market cipher. So nothing on the 12. Let's take a look at the 10. Anything on the 10? Can't quite see anything on the 10. On the 5 minute. Alright, this is when you start to think, right, you know what? This could be it. This could be all the zones we get. Well, we do have a 5 minute zone, but it's inside that 1 hour zone, the 4 hour zone. So, if you're watching the 4 hour zone, you're probably going to see that 5 minute zone anyways. Alright, cool. So that's what we've got so far, yeah? So we've got all our zones marked out. I'm not really going to go on the 3 minute, the 2 minute, the 1 minute now. Do those zones work? Do you get a 2 minute zone that could be respected? Yes, you could get that, but I didn't think that would be the case today. So why am I drawing out these zones? The reason I'm drawing out these zones is because I am anticipating those being the reaction points for my pullback. Alright, in the case we do rally down, obviously we're in a trade right now, price is going in the right direction. But in the case we do rally down, this could be the potential point, if we do break down, this could be the potential point for that reaction play there. That could happen there. It could seep a little bit further down there. Or it could come and get respected of this 15 minute zone here. Alright, so that's why we've got those zones marked out. Now next, let's look at the fixed volume profile. Let's see where most traders within this range has come into action. Look, so over here we've got a value area high coming in at this zone, which is nice. But we've also got a POC coming in at this zone, alright, which is a 15 minute zone, which makes me think, this is definitely one that was worth drawing. So we're going to extend that one. And we're just going to add, not only is that a 15 minute zone, but it's a 15 minute zone plus our POC. Alright, so potential area of interest, point of control. Alright, now in the case we start to come to the value area low, now that is a deep retracement. Let's just check what that would look like as far as our Fibonacci tool goes. So look, that 15 minute zone is also coming in at that 618 level, which is a nice area. So what I'm going to do is I'm going to make that zone a tiny bit bigger. I'm going to drag it up. And I'm going to say it's a 15 minute zone. It's a POC plus it's a fib level. It's a fib zone. Alright? So this could be a potential interesting area to get that play, okay? Now I'm not saying limit order it. I'm not saying set your order now and say, right, I'm going to set my order at 59,597. I'm not saying do that, but sometimes it does work. But obviously it's your money, you decide what you're doing with your money. Yes, that's it. That's it. So those are the areas. That's what I'm looking out for, that retracement. Okay, so therefore what I'm going to do next is I'm going to then say, cool. I'm going to set alert number 1 here. I would like to be notified when price gets there. I would also like to be notified when price comes down here. Okay, and not just that, I believe I would want to be notified as well when price comes to this range high. Okay, because price could simply, we could get a situation like this. If we go to the whiteboard, I'll show you quickly where we've got a range. Okay, let's take this for example, where we've got our range, and on this range, if we get rid of this, we obviously have the uptrend. Okay, and we have our range, and then we break out from the range, but that break is only simply to come back into the range before it goes up again. Okay, so we could get a scenario there. That's why it's important to draw, if this